one guy who's always believed in the market is Vikas Khemani. He's always said, stay bullish, stay bullish, stay bullish, stay bullish. Once more time, stay bullish. Right?
Absolutely. So,
How you been, my friend? How things? That coffee never happened.
all well. I think you are busy. Most welcome. Come. Let's see this evening. Most welcome. Come on.
We've come a good way up from the recent low. Is this as good as it gets, or this rally will surprise us on the upside?
Nikunj, like we discussed in the past, I think these kind of corrections are par for course. It happens in every bull market every 2, 3 years, and I don't see any major sort of difference this time around. We had similar correction in 22. 21 was a great year, but in 22, the concern came around Ukraine war, and we saw market correcting from 18,500 Nifty to 15,500, almost 20% correction. And that time also the environment was very much similar. Most people kind of turned sort of bearish, global concerns, oil prices, people started predicting very high. So I think all those things sort of in a bad market, people tend to kind of extrapolate more bad news. So that has happened this time around also. Of course, last year we had a great year. 23 was a great year. And so this kind of corrections are good in some sense because they do clean the excesses. They kind of bring down the reality check. They also bring down the value of the, make sure that value of discipline, value of the fundamental investing, all those things are good, healthy corrections. So I see this nothing beyond that. In my opinion, by and large, most of the damage is done. Of course, mid and small cap has taken larger beating. Some of the stocks which were kind of extremely frothy has taken even more, and some of them might not even come back, to the previous highs. But good companies will come back. We've seen that good businesses will come back, good sectors will come back. So I think we are in. I'm quite positive. Markets have ignored a lot of policy pivots. A lot of good news markets have ignored in last 1.5 months. All those things as they really play out on the ground in with 1 or 2 quarters of lag, we will start seeing markets taking note of that and I think a little bit of this tariff uncertainty which is around the corner. In my opinion, next 1.5 months should settle down, and with that. I think market should be okay.
Okay. Market open, nothing big in terms of hum and drum here. So because in terms of sequence of events, let's try and understand. In a month from now, we would know tariffs, we would know about earnings, and we would know about macro in terms of what RBI and what SEBI would do. So a month from now, a lot of clarity would emerge. So then what happens after that?
Uncertainty goes down. See, in this process of uncertainty and excessive valuation, partly your valuations have corrected, earnings have sort of moved 1 quarter, 2 quarter ahead. So to that extent, valuations also become even more cheaper. And I think the decisive rally in the markets would happen once the environment for the interest rate cut happens in US. There's already sort of a call for it, and in my opinion, it is inevitable whether it is happen in 6 months, 3 months, 12 months, nobody knows. That really depends on various outcomes which are lined up. So assuming that, let's say, tariffs are not as bad for inflation or are moderated or adopted in a sensible manner, then you might see that coming earlier versus little later. So I would say that the sideways market movement happens with the interest rates coming down, which I would like to believe, or I have a sense that you will have either within this calendar year or within this fiscal year, or 25, 26 fiscal year, it should happen. Hence, I've been saying that, for some time that markets have bottomed out. Most of the damage is done. Corporate earnings, there's nothing majorly wrong. 1 or 2 sectors can be here and there, but structurally speaking, we would have 14, 15% kind of earning growth next year, which is, I think, fairly decent. So I think if that kind of setup is there with 18 times, 19 times Nifty earning, that should be okay. And if the Fed starts, the expectation of the Fed rate cuts happens, then you will start seeing decisively money flow moving from the foreigners towards emerging market, because that always happens. So that could be another positive trigger. So net, I see more positive than negative from here in the markets. And also, Nikunj, if you see last 2, 3 months, many good news happened. RBI had a policy pivot, interest rates coming down, liquidity squeeze at them getting eased up. Risk weights for the NBFC went down. RBA has kind of given very, very, sort of dovish growth focused commentary many times over. Government has done this whole tax break. February IIP numbers were good, electricity consumption was good, tax collections were good. So I think if you see a lot, there's nothing structurally to worry about except that, we needed this whole, correction, consolidation, cleansing, which has kind of happened. And from here, so I don't see major damage, but I think should structurally go up.
Okay. Vikas, let's look at IT. Bad is getting worse, and worse could get even it could deteriorate more. Are we at the turn where, because of AI or because of this entire economic slowdown which will happen in US, IT companies actually could continue to remain under pressure?
Short term might be yes, but again, Nikunj, structurally, if you see over last 5, 10, 15, 20 years, whenever there is a technology transition which has happened, Indian companies have benefited more than actually lost. Whether it was Y2K to enterprise ERP to digitization to cloud migration, everything. If you see, opportunity size has only become bigger and bigger because fact that there are three major drivers of IT sector, and this I'm talking about structurally. There could be 1 year of here and there can be transition, which is right now we are going through. But India's leadership in the IT services space, right? I mean, Microsoft can go and sell Azure, but the lift shift implementation has to be done by the Indian IT services company, right? Same with say a constant technology disruption. Second, our market leadership in the space, and thirdly, aging population elsewhere, which will make sure that more and more technology is adopted. So I think all these things are the structural driver of the IT sector, which will remain. Now, using AI, IT some companies will deliver services differently. So to that extent, their cost structure might go down. To that extent, uh, you know, price deflation might happen, but that has always happened. Every time IT companies have reduced prices and got more volumes. So like I said, we remain positive in the sector, but you have to identify companies which will benefit from this transition. Some companies will suffer from this transition. Some companies will benefit from the transition, and those are the segments and companies one has to identify and invest.
Okay. Now, where do we go from here in terms of some of the good old themes, defense, PSUs? Where does that fit in?
I think, see, again, defense, a lot of cleaning has happened. Still, I feel could happen some more. But again, I would say depends on the name and that depends on the business model. I would not just defense spending is going to increase, is increasing, but it has its own sort of risk reward. So I would always say that look at company specific and valuation is very, very important. Defense does not mean that you end up paying any valuation, and that's very, very important. So theme remains intact. There's no question in that. Same way, I think within PSU also, again, PSU is not a sector, but PSU, I think you have to look at specific companies. Like, let's say PSU banks, we are quite optimistic about. We have seen a lot of sort of value correction happen, and valuations are quite reasonable, 0.6, 0.7 time book, which we saw similar kind of valuation by the way in 22. And from there, we saw good numbers coming through. So whatever happened at the macro policy level on the monetary side will have positive impact on the growth of these companies. And so that could lead to some bit of re-rating and there could be good risk reward for PSU banks. So I would say look at the sector and within that PSU in general basket is doing sort of well from a governance perspective, but then you have to live with the nuance of each sector and business model of the PSU.
If you like this video, then like, share and subscribe to ET Now.